And we are back. NSC turnover 550 million. Again, this defies the fact that there's a couple of arrests, potential arrests affiliated with the Treasury. That's the Cabinet Secretary at the Treasury, Permanent Secretary at the Treasury. The market seems to have snubbed this kind of news that is continuing. We have seen an interesting trade on on Barclays Bank rather. 15 million shares have crossed today at 10.3 shillings. It's a foreign, so we've been seeing this is sort of the third tranche of a similar volume of shares that we have seen go through the market over the last couple of weeks. For your own benefit, tomorrow we want to be discussing Barclays Bank and the investment thesis. Our guest, who will not be here today but will be here tomorrow, has a price target of 13.15. So at 10.3, there's 26% upside. You certainly want to join us again tomorrow to understand what's happening in that name. However, for today, what does the finance bill hold with regards to taxes, and how does that impact any of your investments, whether it's on the listed space, the public space, or in the private space? Mr. George Omolo, who's a managing partner at AMG Kenya, will be helping us to have that conversation. Welcome, George, to the show.
Thank you. Thank you very much.
All right. Tell us, what are the tax issues that are captured in the finance bill, and what is the potential impact of this?
I want just to give you a background
of
where the Treasury is coming from in this year's budget as they look at financing the 3.2 trillion budget that they proposed. One of the areas that the Treasury is looking at is to raise as much as 80% of that amount from our taxes, that is the local revenues.
Okay.
And that means that they've had to look at a number of our tax lines and probably adjust them to meet those budgets. One of the areas that I want to talk about is capital gains tax. Capital gains tax is a tax that you pay when you transfer property, say from one individual to another, or when you transfer shares. Capital gains tax initially was at 5%, but has gone up to 12.5%. With the increased level of business in the real estate sector, that certainly, I think, Treasury was looking at raising more revenue in that line. And again, the trade that you've just talked about, the volumes of trade at NSC. NSC, whenever you transfer shares, there's a capital gains element, and therefore Treasury is looking at tapping into that revenue.
Is it transfer or trade taxes? No, rather, do you mean transfer?
When you transfer, for example, if you're transferring land from
okay, but then for shares,
the capital gains.
Yes, but then for the shares,
attract the capital gains tax. Even for shares, if I bought Safaricom shares at say 5 shillings, I'm trading them at 10 shillings. There's a capital gains element that comes in there, and therefore that is taxable.
Has it been executed? Because I know the brokers have been against it. It keeps coming, but then it keeps being delayed. It's
not been executed, but I think within this quarter or quarter four, probably Treasury will execute it. But again, with what is happening now, we are not certain if that will come to fruition.
Okay.
But let's wait and see how it goes. So the other aspect is reduction of VAT, the withholding tax on VAT from 6% to 2%. But I must be quick to mention that it has not been operationalized. What Treasury was looking at is by reducing the withholding tax on VAT from 6% to 2% is to manage the VAT refund that is on the one arm, and again to increase compliance from traders. As it is, that is a good thing from an accounting perspective. What we wait and see is how does KRA implements that, and how do they operationalize that aspect of VAT. And for probably last and one final aspect that I wanted to talk about is the turnover tax, which previously was called presumptive tax, where if somebody trades not more than 5 million revenue per annum, then you pay a certain percentage to the government. What Treasury was looking at was to broaden the tax band for the populace, and I think that's a good thing. But the challenge comes in implementation. How do you implement that kind of tax to net off these people not in the tax bracket? Treasury proposed that they want to partner with county governments. We are still waiting to see how that will pan out. But I think that is a good thing for Treasury. Okay. If they can implement it, then they can be able to raise enough revenues to cover our budget.
What about excise tax?
Excise tax, the only area that maybe I wanted to flag out or to talk about is excise tax on betting revenues, which is a key thing. I think it is something that is very hot in the market today. But if you look at the kind of turnovers that the betting companies are transacting, then if Treasury could take 10% of that, then obviously it's good revenue for the government. But again, with the recent happenings, I'm not sure if that is something that is going to be implemented in this year, but probably by next year, something that we can we can look at. And again, revenues from online transactions, for example, online e-commerce revenues, Jumia and all that, it will attract excise tax.
At what rate?
Still at 10%.
Okay.
We want to wait and see how KRA or how Treasury will implement those tax proposals.
All right.
Judge, you mentioned withholding tax on VAT.
Yes.
So what's that? I mean, why withholding tax on VAT?
The way VAT works is that when I sell an item to a buyer, then I'm supposed to charge him the price of that product plus 16% VAT.
Yeah.
But remember, I also buy that item from somebody else,
Yes.
and that person has charged me VAT.
Yeah.
So there's the input VAT and the output VAT.
Yes.
As a vendor or as a trader,
Yeah.
I'll net off my output VAT from the input VAT. The net is what I submit to KRA.
Yeah.
But there were a lot of instances of avoidance, let me call it avoidance, tax avoidance, where I am supposed to declare that to KRA, but I intentionally don't declare.
Yeah.
So withholding tax was brought into the picture to facilitate compliance. For example, if I if I did a road for the government, then if the government withholds 6% of my revenues, then they declare to KRA, then KRA automatically knows that I've done a project, and therefore they're waiting for me to declare. If I don't declare, then they'll be on my case the next day. So it is an aspect that was meant to improve compliance, but again, generate revenues for the government, which has worked quite well over the last few years. I think the 2% proposal is something that's welcome to the business community, but as I said, it has not been operationalized to date. And that is something that we're waiting to see how KRA will deal with.
When is the effective date, supposed to be?
The effective date, remember the budget runs from 1st July
so
to 30th June. So it should have been 1st of July. From 1st of July it should have been operationalized. But probably within this quarter or quarter 4, it should come into effect.
But George, the Treasury is not likely to meet its revenue collections target for the just ended fiscal year 2018-2019. Could you paint a picture of why, for the 3rd consecutive fiscal year, Treasury is not going to meet its fiscal targets?
I want to look at it from the macroeconomic level, and then I'll come to the microeconomic bit. At the macro level, our economy has not been growing at a pace that it used to grow pre-2015. That means over the last few years, you've seen companies retrenching, companies posting profit warnings, so to speak. And when a company retrenches, the first item that is affected is the payroll. And when payroll is affected, then payroll tax is affected immediately. And if payroll tax is affected, then KRA will not meet the line in that, and the collection in that kind of tax line. When a company posts profit warning, and I've seen that for quite a number of listed companies over last year, last quarter, over the previous quarter. That means that when a company does profit warning, then they're simply telling KRA from a tax perspective that they're not going to pay the tax for that
income tax.
Exactly. And therefore, I would want to say that our economy has not been growing fast enough to support our budget or to support government expenditure, and that is why you are seeing those lags between what KRA projects to collect vis-a-vis what they eventually collect. On the other hand, government is the only institution that makes money by spending. And the way government has been spending money over the last few years is they have done very, very huge projects. But as I said here before, most of those funds have not had a landfall in the economy. For example, I was given the example of the SGR facility. This is a facility that was negotiated in China, financed in China. What what comes here is just the material and
the machinery, the heavy machinery.
Yes. So the money doesn't,
and the labor.
Exactly.
Yes.
The money doesn't make a landfall in the economy, and therefore it has zero effect or very negligible effect in the economy. And you find some of these companies, some of these heavy investment companies, are given very serious tax rebates by Treasury, and therefore they can operate here for like 3, 4, 5 years before paying, without paying a single cent to Kenya Revenue.
Yet the debt accrues, the debt financing.
Exactly.
Okay.
Exactly.
Maybe we can just take a quick break.
Yeah.
The market has closed. Look out for the closing bell and do not go anywhere.